the channel. My name is Shannon Rivkin. In this week's video, I'll be discussing the Bingo Industries takeover bid. Here is just a bit of summary of some of the main clauses within the scheme implementation deed signed by Bingo and Macquarie Infrastructure and Real Assets, which I'll call MIRA. This followed quite an extended period of due diligence and ultimately came in slightly below the previous indicative offer, which was $3.50, but does include some 5 cents worth of potential franking credits that does get it up to that $3.50 level. The offer also has a cash and share alternative, which comes in a little bit lower, which will allow people to hang in there for the ride with MIRA, and given MIRA's strong track record and obviously appetite for this acquisition, would be reason to think that there could be some good returns by hanging around. But as always, we look at these for the cash bid and their arbitrage or potential bidding war potential. I should say as well, the premium for this one was about a 33% premium to the 1 month volume weighted average price, which is I would say a pretty standard control premium you expect to see paid in these sort of situations, but by no means a huge knockout price either. Just a little bit of a chart here, show how Bingo traveled, especially through the pandemic. Certainly for a period of time, it was underperforming the pandemic, during the pandemic, which ultimately, given how well the company started to recover, you'd suggested a little bit of a mispricing. Importantly as well, its main competitor, Cleanaway, has seen a similar ride as well, if not a little bit better, and they too are embarking on some corporate activity by buying some of Suez's Australian assets, and so this sector is ripe with consolidation at the moment as the big players try to get bigger. Now, we've decided to buy this one. While there is a small arbitrage on offer because the stock's at about $3.40 versus that $3.50 gross payment, it's an interesting situation because it's been there's been this huge due diligence period. MIRA was in due diligence with a partner, which was CPE Capital, and CPE has simply disappeared at the end of this process with MIRA going it alone. CPE is a big player, and they, until recently, at least as far as the speculation goes, were in the data room along with MIRA. So for them to walk away either talks to a split with MIRA alone, or potentially them going cold on the acquisition. It's obviously impossible to know, and there has been surprising lack of information coming out of the MIRA camp or the Bingo camp about what was happening here, but my guess is that there's a decent chance there's been a disagreement between who splits up what between CPE and MIRA, and that may suggest that CPE could be waiting in the wings, deciding whether to launch its own takeover bid, which would simply need to come in at a premium to dislodge the board's loyalty towards MIRA. This, typically, maybe a few years ago, I would have said that you don't often see private equity companies get into bidding wars against each other, but we're in an incredible environment right now with very low interest rates, cash burning a hole in pockets of hedge funds, pension funds and private equity funds all over the world, and really you're seeing more bidding wars than I've seen in my time buying these sorts of opportunities over many years. This is 2020, and take note, this is in the middle of a pandemic, and I've marked with an X all of the investments that ultimately saw increases, whether that was from a competing offer or from an increase from the original offer, and that could simply be because from concern that the bid might not proceed. That's roughly half of the opportunities resulted in higher bids, and that's continued into 2021. We've seen Coca-Cola, which I don't think is on this list, receive a higher bid, and we've seen Vital Harvest, a stock that we're in, see many new bids as well, and that actually is between both MIRA and another private equity group. So I think there's no doubt a company like Bingo, which has some really good long-term themes behind it, could attract competing interest, whether that comes from pension funds or private equity funds. As far as trade buyers are concerned, I probably only would say that Cleanaway would be the only one large enough to make it work. But from a competitive perspective, I'm not sure the ACCC would look too kindly on a move. So I think that's probably a non-starter. But from CPE or potentially alternative interest, there's every chance to think that at least will be other parties casting an eye on it. So being able to buy in with very limited conditions attached to the deal, and have a little bit more than 2% upside if no other bidder emerges, and obviously unlimited upside if we get into a bidding war. These are the opportunities we like. Anyway, that's it for this week. Thank you very much for tuning in, and if you did like it, please click like and subscribe, and I'll be back to you next week with another video.